Hey guys, what's up? Welcome to a new video today. We are going to be talking about multi-time frame strategy on an individual stock. Very simple video. I'm not going to go too much into detail unless you guys want another video on that, but I'll just go over some very simple stuff and explain why this is one of the most effective ways to trade a stock when you are trading. So if you have a broker, if you are using Robinhood, it's not going to work. If you have Webull or TD Ameritrade or different brokers that are professional, you should be able to make one of these right here. So if you're on TD Ameritrade or any other broker, you should be able to have a tool that can open up 4 different boxes or 4 different charts right here. So I have 1, 2, 3, 4. And if you're on TD Ameritrade, you can go on the top right here and click on the boxes. And currently I do have 4. Very simple. Once again, I'm not going to explain too much, but I will explain some trading how to use a different time frame, and also go over the Google Docs I made for you guys. So first things first is the way I set it up for my trading is I watch 4 different time frames each time when I'm trading a stock. So we'll take SPY, for example, today on October 10th, 2022. We will go over what time frames I use, and we'll go over what I do with each time frame and what to know about each time frame. So first, top left right here, we do have a 5-minute chart. Very simple. Everybody should know what the 5-minute is. It's going to be the intraday trading, pretty much the most basic time frame everybody uses, pretty much. You don't have to use the 5 minutes if you don't want. Everybody has a different style of trading, but this is my way of trading. You can try it out if you want and see if it works for you. If it does not, change it up and see what works for you. But I do not recommend 1 minute time frame unless you're someone that's a professional and you want to make 30 trades a day. Go for it. Go ahead and do that. But minimum I recommend is using the 5-minute chart. Next up is the 15 minutes. A little bit of a bigger time frame, but less noise. It helps with day trading as well, and I will explain why in a little bit later. And then right here on the bottom left, I have the 1-hour chart. 1-hour chart, very, very helpful chart. Everybody should use this time frame, no matter what. Swing trading, long term, day trading, scalping, no matter what. Everybody should use 1-hour chart. Always have it open. And also, same thing, daily chart. Everybody 100% should always use a daily chart, always, no matter what. But we'll get started. So I have 5 minutes, 15 minutes, 1 hour, and daily. Why do I use all those time frames? We're gonna pull up my screen right here real quick, and I will be going over this Google Doc I made, and also this will be in the link below in the description for you guys to go on it and put it somewhere on your notes or something. But right here, multi-time frame trading strategy works on any stock you want. It has to be 4 different time frames on one stock. Two different time frames not going to really be as effective, but it can work, but not as effective. So we have 4 different time frames in one box or one screen: 5 minutes, 15 minutes, 1 hour, and daily. So what's the 5 minutes for? The 5 minutes is best for scalping quickly. Let's say you're making a trade that can go, I would say, 5 to 20 minutes, sometimes 30 minutes. But the best way to go about 5 minutes when you are day trading is wait for the first 15 minutes of open. And then once that happens, you use the first 3 candles of the open as your opening range break for your support and resistance. So once that range is created, you are going to use the top and the bottom of that range in the first 3 minutes, first 3 candles as your support and resistance for the day. So what does that mean right here? So what I'm basically saying is, once you had the first 3 minutes of the candle, first 3 minutes of the day created, 5, 10, 15, you are going to use the bottom and the top of your candles for the range of the day. And what that really does is, what this is called the ORB, or opening range break resistance and support. So what this is basically the range for the day. And this is a created range. It's not going to be trading inside this whole range for the day, but this is something very important to know about, especially for range breakouts. So let's say we're breaking the resistance right here. We are going to be breaking out over the range. We're breaking down in the range. And sometimes these ORB levels will be retested later in the day. So this is why 5 minutes ORB is very, very important. And everybody should know about this one. So let's go over the action real quick on SPY using the ORB real quick, and I will explain why it's pretty important to use. So first 3 minutes formed, we will give it more time to see when we will break either the top or the bottom. So we're not going to trade until either of these levels break at 364.21 or 362.30. So where is SPY going to go? Let's give some more time. Here we go. Next candle, we break down. And typically, when a break happens, that is where your entry should be. Make sure you 100% confirm that the candle closes below or above the range break. And here's what happens on SPY. As soon as it breaks down. Next candle, it retests that previous support as resistance. So now this ORB level used to be support, but now it is going to be resistance because we broke down and then we retested that level. You can see right here, we tested, fell back, and became lower. And guess what happens where SPY bounces off of? The previous day's low right here. So this is where SPY decides to bounce. SPY decides to bounce right here, and that is where your exit should be, or taking most of your profit should be, and then waiting to see where it goes from here. Either we break down lower or we bounce right here for a temporary move up higher and then come back down. So guess what happens? SPY bounces off, breaks back over, back inside the range again, and that is where you should be avoiding your play right there. So no plays right here. Don't enter anything. Wait for confirmation. SPY breaks above, has a false movement. So this is a false breakout that SPY is having, because usually when this happens, it continues to go up higher, higher, touches the top of the range. But instead, it has a false move. It happens. If you enter calls that move, you're gonna have to take your loss. As soon as this breaks down, it comes back down, and guess what? You're going to be waiting once again. Here you go. Next candle flushes down below that 360.99 support, and guess what? We're coming back down lower, 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 selling off, and we came back up, retested that same support as resistance. So this is now resistance on the 5 minute chart. Very simple. 5 minute chart, resistance, came back down, tried again, false move right here, a false break. Take your loss right here, wait for the move to break back down, or you can wait for the low of this right here to break again. And then guess what happens? As soon as we broke that low, we started selling off from here all the way down to the low right here. And let's just assume that this was a low that we hit from a daily chart. So this low was made, this low hit right here because of the lows that we had in the past few weeks. So we're gonna put that real quick on the daily chart. 357. So we'll put that right there real quick. And here you go. SPY makes a very close move to that 357 level, but instead decides to reverse right here. And that is where you should be exiting your calls or your puts, because this has a big reversal, or at least a decent size candle reversal. And you never know these days how much of a move we can go higher before we come back down. So take your profits on your puts, wait and see what happens. If we can break over this resistance, and guess what? SPY breaks over, breaks up, flags right here, has one big candle, continues higher. Guess what happens with SPY again? We're back at the same low as where we were right here in the previous ORB level range at 362.30. Guess what happens with SPY? We tested it, We tried to break above it, but we failed. And now we're coming back down. And now we're stuck in a range for the rest of the day, forming right here and right here. So this is where I pretty much avoided SPY for the rest of the day because there's nothing going on. And usually this time at power hour, the market is usually the time I avoid trading because it's the high volatility. It's usually the time to burn premiums for the next day ahead. So 5 minutes, try it out on your multi-time frame, especially when you're watching all the time frames right here. Make sure you have levels on your bigger time frames. For example, we have a bigger range on top right here. We have a bigger support right here on the 1 hour, and we also have to use the daily chart. And I'll explain why those are important as well. So moving on, 15 minutes. Best for longer term day trading and outlook for the day. So 15 minutes equals 3 5-minute candles. So that will mean less noise for people who are trying to day trade a longer term and not just scalping. This will reduce noise for traders. If you are someone that can hold longer or hasn't farther expiry, you can wait the first 30 minutes of the market to open for the ORB to form, ORB's opening range break to form, and use the ORB levels as support resistance for the day. So same exact thing as 5 minutes. It's just longer term time frame. Go ahead and see which works for you more. I'm gonna delete all these levels real quick for you guys, and we'll just make a ORB range real quick. So here we go. We have the first 2 candles right here. It's pretty much a little bit different than the 5 minutes. So you can see how we have the first 3 minutes right here. So if you are someone that's day trading or scalping, you want to be using a smaller range and more candles, and that will help you more with scalping. If you are someone that's using 15 minutes, you want to definitely be using 15 minutes for a farther term expiry, or you are someone that's trading that doesn't like scalping. You want to trade for at least over an hour, have a decision for 2 hours or longer, so you're not scalping back and forth. But 15 minutes has a better picture. So here you go. You can see the 5 minutes has a pretty choppy chart right here. We have a false breakout. We come back down. We come back down. A false breakout again. We come back down around here, forming a range. Over here in the 15 minutes, you can see we have an ORB level right here at 361.50 and one right here at 364.20. So first 2 levels, we're not going to trade until the range breaks. So here we go. 15 minutes, we break down, but we also bounce off the previous day's low, which is going to be right here. So this has a bounce, comes back up. We're back inside. Now we decide to sell off, and this is where you should be back in puts. And guess what happens with SPY on the 15-minute charts? So instead of breaking back over with the false move on the 5 minutes, the 15 minutes has less candles and less noise. So here you go. 15 minutes tries to break back over 361 on the ORB, but guess what? It could not do it. And that is when you should be holding your put still, because we did not break back over. There was no confirmation. And here you go. SPY, next candle, starts selling off all the way down here. And now we're back up again. So this is where you should be taking your profits on your puts. Very, very simple. Same thing from earlier. 357 is going to be your support, your recent support. SPY reversals off the 357 area support right here, and we bounce. And guess what happens with SPY again? We're back at 361.50 ORB support as resistance. And guess what? We could not break over it, and that is where you should be back in puts again. But instead, power hour, once again, we're chopping up, so nothing happens. But that's a very good way of using the 15-minute chart. As usual, do what you want. Try the 5 minutes. If it does not work for you, go ahead and use the 15 minutes and see what works for you. If you are someone that likes to trade, likes to make multiple trades a day, use the 5 minutes. If you are someone that's trading farther out, can hold longer, use the 15 minutes. But if you're also using you can also use the 5 minutes and 15 minutes if you want. It will actually help a lot, especially with the 15 minutes, because it will give you an outlook for the day, and it'll also help you prevent from getting shaken out of your precisions. So try out the multi-time frame and see how it works. 1 hour. 1 hour. Bigger picture for important SNR levels, supply and demand, or support and resistance. Determining the volume of a support and resistance level is really important. The bigger the volume, the stronger the level is, and higher possibility of holding and bouncing a level. Vice versa with the resistance level. 1 hour also helps with finding where levels have held in the area previously. I do not use any indicator on the 1 hour chart. So why is a 1 hour chart very important? Because this gives you a good size range that you can use for the next couple of days, even using the same day trading. So let's say, for example, we have a recent low right here, and we have a recent high in this area on the SPY right here. And it's always good to know where your levels are on the bigger picture instead of just using support and resistance levels. Like, for example, if I wasn't using the 1 hour chart, all I have is this area, and I wouldn't know that this was a support that was actually held back recently. So no 1 hour chart, right? So I don't know where the next support is, because since we're breaking down right here, how do I know we're going to have a reversal soon? Guess what? Multi-time frame trading. Use the 1 hour chart or the daily chart, whichever works, whichever is more necessary. So 1 hour chart helps a lot with finding big ranges and finding the most recent support and finding the most recent resistance. So this is a very good example of using a 1 hour chart right here while we're day trading. So here we go. Let's go back over here real quick. 1 hour also helps with finding where levels have held in an area previously. I did not use any indicator on the 1 hour chart. So if you are someone that's thinking about using indicators on 1 hour chart, I really don't recommend it. Unless you're swing trading, go ahead and do that. But this video, we're talking about day trading. So very simple. We're going to talk about the daily real quick. So biggest picture, this is where everybody should be using. This is the time frame every trader, every swinger, and every investor should be using. Same with 1 hour chart, but also include the SMA 20, 50, 100, and 200 as your trend support and resistance levels. Trend, that's a big difference. We're going to talk about that real quick after we finish this. Most traders trade without using daily SMAs and are not aware of upcoming rejections and bounces off estimate levels. Daily has the strongest SNR levels as well. You can use 1 hour and daily to determine a swing setup. So once you're done trading, you have 30 minutes to figure out what's a good setup for tomorrow swing. Go ahead and use a 1 hour daily setup. If you're looking for swing, never ever use a 5 minutes or 15 minute chart to figure out where we can go from that, because one day is different. Every single day is going to be different. But if you are using the 1 hour and daily chart, it's going to help you because you are using the bigger picture. You're going to be using the trend SNR levels, which I'm going to talk about real quick. So daily chart, always use simple moving averages. Simple moving average 20. Simple moving average 50. Do whatever color you want. 100. And simple moving average 200. So in this video, it's not going to show that it's coming up. It's not going to show that it's going to work from recent times because we've been pretty far away from the levels. But I will show why it's pretty important to use. Okay, so let's go in previous times. Let's go with, we can use this area or we can use SMA 200. What I'll do is I'll use SMA 200 right here. So let's say we're day trading back here, right? So if you are someone that's looking for a swing setup or a 5 days out trade or swing, I mean, or even if you're day trading, very important to know. So let's say we're on this day right here, okay? August 16th. We don't know that this is resistance because there has been nothing right here, nothing going on from these times. There's no resistance, right? There's no resistance support right here. But other than that, if you have your estimate levels, especially the 200, 150, very important levels, add them. So how do I know what's going to happen at that time? Where is the resistance coming up? Where is the support coming up? This is called the trend support and resistance. So here we go. We have the market moving up, and somehow we have a reversal out of nowhere. And imagine you are not using daily chart. You're unaware of a rejection coming, and we don't have this level plotted. So where is the resistance coming up on the market? How do we know when to take profits on your calls? So very important. Once again, use the daily chart. This is where the market has a reversal right off SMA 200 on the daily chart. Right here at the exact level. This is where SPY bounced or got rejected at 431.76. And this is where SPY tops. We start selling off. We have a gap down next day. Come up, come back down. And guess what? We gap down, try to consolidate, and that is where the market starts selling off. So always use daily time frame, no matter what. It's going to help you a lot, especially when you are looking for something for a swing, even for day trading, because that could have happened in the middle of a day. I'm not going to go back because it's not going to take me there. But yeah, so very important to use multi-time frame when you are day trading stocks, or when you're day trading a specific stock, SPY, AMD, Apple, Tesla, whatever you are trading, always use multi-time frame. It will help you a lot with your trading. I'll put this document in the description below for you guys, so you guys can click on it, copy it, and then put it somewhere under notes so you know what to note next time. For next video, if you guys want, I will go ahead and make another video on the same concept. But this time I will be talking about which indicators to use, the correct indicators for each time frame, and how to use indicators, and what's the best way to take profits, and where to take your profits and all that. So if you want that video, please comment below and let me know if you want that. I will be happy to do it. That'll be it for today's video. Very important. Click on the link below in the description, copy this in your notes, study it, try it out, multi-time frame, add your 5 minutes, 15 minutes, 1 hour in daily chart, try it out, give it a week, do it every day of the week and see if it works for you. If not, adjust it, change your time frames and see what works for you. This works for me. I like it a lot. I use this every single day in my trading. I'm happy to share it out for you guys. Try it out. I'll see you guys in the next video. Thank you for watching, and I'll see you. Take care.